And thank you, Investor Inspiration, for inviting me back again. It's an honor to be here with all these great professional traders and to be here with the attendees. So I enjoyed this forum a lot. Please make it interactive as we go. Ask questions as we go along. And later in the presentation, I'm going to be offering to analyze any symbols that you're interested in using the method that I'm going to talk about. So have those ready. Okay, so again, as Renee said, I'm Dean Jenkins, founder of followmetrades.com, and today I'm going to talk about the method I use in my own trading that is getting me consistent profitability for several years now. I'm going to talk about how I use Ichimoku Cloud and Elliott Wave together. I call it East meets West. And you know what happens when you get two great trading systems that are completely different? What happens when they agree? All right, that's a really powerful combination, a really powerful setup. And so I say profits explode. And just, you know, by way of further introduction, this is my website, followmetrades.com, there I am. And here's the results we've been getting for several years now. You know, whether the market's up or down, of course it's up this year, we're still beating the indexes by a very healthy margin this year. As of yesterday, we're up 24% in our portfolio. And even though it's been a strong bull market in the S&P and the Dow, we're blowing that away. And I believe in providing complete transparency in my trading. So each of these years you can click and go see the actual details of every single trade we've taken. And there it is. And also I believe again in transparency and authenticity. And so we've hired an external CPA firm to audit our results, and they're doing that, and those reports are listed there. All right, so getting into it. Just a real quick disclaimer. You know, I'm a trader. I'm not a financial advisor. I'm not giving financial advice, right? So I'm going to be talking about some real live trades today and analyzing live markets, looking at symbols you're interested in. I'm going to offer my opinion. I share what I'm doing. Whether any individual places an order, makes a trade, you know, that's strictly your decision. I'm presenting for education, information purposes only. I'm not giving financial advice because, again, I'm not a financial advisor. I am a trader. Okay, here's what I'm going to cover today. I'm going to talk a little bit about the tools that I use. I'm going to talk about Dow Theory, Ichimoku Cloud, Elliott Wave Theory. I'm going to talk about how I use those all together. I'll share my current favorite trades that I like right now with you at the end, and I'll analyze any charts that you are watching that you're interested in. I'm focused primarily on stocks, stock charts, on daily, 60-minute to daily. So that's really my focus, my expertise. My method works on Forex, it works on futures, but my focus is really on stock. All right. So let's jump into it. I use these three key tools in my analysis, in my trading: Dow Theory, Ichimoku Cloud, Elliott Wave. So here's Dow Theory. And you know, Charles Dow developed this theory back in the late 1800s, the 1890s, right before the turn of the century. And this is not the complete portion of Charles Dow's theory by any means, but it's a segment of it, and it still applies today. It's still very applicable. And what Charles Dow said was, hey, you have a bullish trend, an upward trend, as long as that trend continues to put in higher highs and higher lows, and higher highs and higher lows, higher highs, higher lows. As long as that pattern is unbroken, you're in an uptrend. And there's a way to tell when it's ended too, but in a downtrend, as long as you're putting in lower lows, lower highs, lower lows, lower highs, lower lows, you're in a downtrend, a bear trend. These definitions are helpful because price doesn't move in a straight line, and there can be stress in a trade, even in a winning trade. If you're long and it's going up and then it pulls back, should I get out? Is it over? Am I going to give away profit? And so having some rules about trends is helpful, right? So we have, when is a trend confirmed? A bullish uptrend is confirmed with 3 data points: when you get a high, a higher low, and a new high. That's really powerful evidence that an uptrend is beginning. And then when it does not go on to make new highs, when it makes a lower high and then takes out the previous low, pretty good evidence that the uptrend is over and that a downtrend has begun. So you see the bear trend beginning, or at least a correction to the previous bullish trend. When you get that pattern, a low, lower high, new low, and the bearish trend is over when you get a higher low, doesn't go on to make new lows, and then takes out the previous high. Okay, So I think these are really helpful, and we're going to see them in action on live charts here pretty quick. Okay, let's talk about Ichimoku Cloud. So this handsome gentleman here is Goichi Hisada. He was a journalist in Japan, and he started working on this theory back in the 1930s in Japan. So the Ichimoku Cloud, also known as the Ichimoku Kinko Hyo, or one look equilibrium chart. And it's a really interesting indicator. And what I like about it is it projects support and resistance areas into the future. Very few indicators actually deal with the future. Most of them are excellent rearview mirrors of what has already happened. So here's a picture of Ichimoku Cloud on TradeStation. That's the platform that I am using in my trading and analysis. I think it does a great job of identifying trends and predicting support and resistance areas. You can see again, the shaded area, the cloud is being projected out into the future. So what are the elements here? The first thing is Tenkan line. This is a conversion line, or the fast line. It's similar to a fast simple moving average. Simple moving average is calculated simply by taking the average closing price of some number of bars in the past. Tenkan is calculated by taking the average of the high and low of some numbers into the past. So similar but different. So I got it shaded and bolded here in yellow. So that's the fast line. The Kaijun is the slower line, exact same formula that's looking back a larger number of bars, a longer period of time. So very similar to a two-line simple moving average, just calculated a little bit differently. Again, calculating the average of the highest high, highest low versus the average closing cost of price bars. Okay, the other element here is span A. It's this green line. I've got it colored green, and it's the leading edge of the cloud. Okay, it's the fast part of the cloud boundary. And then there's the slower edge, the trailing edge of the cloud boundary. And then there's this shaded area, which is called Kumo in Japanese, or cloud. And this is really the important part of the indicator. This cloud projects support and resistance. So in this uptrend on this chart that I'm showing, the cloud is projecting where support exists for the existing trend. And again, we look at Dow Theory with this thing moving at higher highs, higher lows, higher highs, higher lows. The cloud is projecting where those major higher lows are going to end and reverse at until the trend ends. So that's helpful, I think. And then particularly when it breaks through the cloud, that's clear evidence combined with Elliott, or with Dow Theory, that a new trend is beginning. So really, really interesting, helpful stuff. Okay, there can be false calls when it breaks out. So we use a couple tools in conjunction with it, right? But once it's right, once a trend really begins, wow, it is really, really powerful. So that's a look at Ichimoku Cloud basics. And you can see again the cloud projecting really, really nice support levels once the trend is established. Okay. And again, make it interactive. Type in questions as I go here. I'm happy to field them on the fly and really to make this as valuable presentation for you as I possibly can. All right, we're going to jump into Elliott Wave. So that's a quick look, a simple look at Ichimoku Cloud. Let's talk about Elliott Wave. Elliott Wave is easy, right? All you got to do is memorize these 144 pattern permutations of super millennium and grand supercycle and whatever, right? It's ridiculous. Most people, when they hear about Elliott Wave, kind of roll their eyes, and this is why, right? This is a very complex, this is the classic approach to Elliott Wave. It is ridiculous, actually. And Elliotticians, this is so complex that they can't agree on wave counts and all that kind of stuff. I keep it very, very simple, right? Oh, Richard's got a question. Why not, in a strongly trending market, why not just have a strategy on buy as the yellow line, place a stop just below the purple line? I evaluated that, Richard, because it's a, I like simplicity. What I find is in an uptrend, you can have the crossovers above or below the cloud. So it's not, the fast and slow lines are helpful, and actually the cloud are derived from them, but using them just as crossovers and entry and exit signals wasn't accurate enough. I needed more, okay? So Elliott Wave techniques can be simplified. Here's a great book, the book on the Elliott Wave techniques. It's written by Bennett McDowell, Elliott Wave Techniques Simplified. It's on Amazon. So I didn't write the book on Elliott Wave techniques, but I helped. I actually did write a chapter in this book with Bennett. And we take a very, very simple approach to Elliott Wave. There's only 3 trade setups, right? We're only trying to trade impulsive moves or corrective moves. We're only trying to trade wave 3, wave 4, wave 5. The initial impulsive move as a trend begins, the correction to it, or the continuation. And this works exactly the same in up markets and down markets. So again, keeping it very simple and just trying to look for 3 trade setups, and they apply to bullish or bearish moves, trends. Interesting that Ralph Nelson Elliott, who developed this, he was working on it at the same time that Goichi Hisada was working on his theory, Ichimoku, in Japan. Don't know if they knew each other, but kind of opposite sides of the world, working on systems that turn out they work really, really well together. Here's what it looks like on a chart. So here's wave 1. This is the initial move in a trend. Wave 1 and 2 can be very small, and we only look at them. Really, it's Dow Theory, right? High, higher, low, new high. When we break above out of a channel with this kind of move, that can be the signal of a new trend forming. And this did. It went on into a big impulsive wave 3. And a reason I say Elliott Wave is so easy is we can see it forming. We can see a trend where none existed before when we break out of a channel. And once wave 3 is already there, it's unmistakable. It's impossible to miss, right? It's a big impulsive move. And if you look at charts today, like, so many of the technology companies, Apple and Microsoft and, you name it, right? They're in wave 3, big, huge impulsive move. Typically by the time it's that obvious, it's too late to trade it. And what we're going to wait for is the correction. We can trade the wave 4 correction if there's enough profit. And if not, if we don't like trading corrections, we simply have to wait for the continuation. Once we have correction into a Fibonacci zone, 38.2 to 61.8, 70% of the time, then we look for Dow Theory, high, higher low, new high, and a few other things, the Ichimoku Cloud, confirmation that we're heading up, and we can project a wave 5 target zone with Fibonacci extensions, 61.8 to 100. Gets pretty cool. TJ is asking, do I use Bennett software, the art software? I do. And it helps with Dow Theory because the pyramid trading points highlight key higher high, higher low, new high points. Very helpful. All right, so you can see here's our wave 3 entry on this trade as it broke the Ichimoku Cloud. So we know using Elliott Wave, this is probably a new trend as it broke out of this channel. We had Dow Theory saying higher high, higher low, new high, and it broke through the Ichimoku Cloud. So I like to stack evidence up, right? I don't use just one thing, just a break of the cloud, just Elliott Wave, right? But when we say, wow, we've got Elliott Wave, we've got Ichimoku, and we've got Dow Theory all screaming new trend, that's powerful. And then it's confirmed. Cool stuff, right? Beta said, which software? It's called the Applied Reality software from Traders Coach. It's a very helpful indicator. So there goes wave 3, and then here's the wave 5 entry, right? We had a good wave 4. There really wasn't enough profit in wave 4 to try and trade it. By the time it got confirmed under the cloud, that wave 4 was already over. It was in the retracement zone, 38.2 to 61.8. So we wait and trade the next continuation. And there's the entry as it breaks a cloud, right? Pretty cool. High, higher low, new high, boom, entry. We put our stop under the previous higher low, right? And then determine the position size by subtracting the entry price from the stop, dividing it into the percent of our account that we're willing to lose, the pain-free level. I use 2%. So I don't trade a fixed position size. I use price action and the distance between the stop and the entry to determine my position size. And then as this thing plays out, pulls back to a higher low, goes on to new high, move my stop there, then my stop there, then my stop there, trail my stop all the way up till I ultimately get stopped out, right? Let that trend run for as long as it will. So I let the market take me out. I don't take profit automatically when it hits the target zone. Let that baby run for as long as it will. All right, hey, you're welcome, Beta. I can show this in action. Here's a live chart, right? This stuff really works. I really use it in my trading. Here's a trade we just closed recently. This is CLMT, Calumet Industries. So you can see on the left, right, this thing absolutely fell out of the sky from 25 bucks down to $3. And then look, we had clear evidence, and I gotta blow this up, of the correction. After a big impulsive move, it channeled quite a while, but we expect a bullish correction to that bearish move. And lo and behold, it happened. I got, you know, in the context of the scale of that drop, it doesn't look that impressive, but when you start expanding it, look what we had. High, higher low, new high. That's where we took our entry. We got into this stock at $5, and then as new higher lows, higher highs, higher lows, we just trailed our stop up. We had established a target zone, a Fibonacci retracement of 930, and this thing went all the way up to 930. We take profit along the way, took a third off here, took a third off here, and trailed our stop, and eventually got stopped out here at $7.99. So we took profit at about $8. We took profit just over $9, and then got stopped out at $7.99. Really a nice winner, and didn't take that long to play out in terms of, you know, daily charts. Took our entry back in late July, got out, actually got out here. No, here, it was here. Yeah, in November. So really nice trade, really nice trade. So this stuff works. Right? And the nice thing is when they lose, and some trades do lose, they lose small. They lose very small based on our risk management position sizing guidelines. So again, laying Ichimoku and Elliott Wave together, right? We take the entries both when Dow Theory, when a wave count supports it, and when it breaks above the Ichimoku Cloud. So that's where we get the east meets west, where we're combining these systems for really powerful. And then we use, you know, Dow Theory, higher highs, higher lows, higher highs, higher lows, trailing our stop up to previous higher lows until we ultimately get stopped out in a trend. So that's how we do it. Let's look at some live charts. Go ahead and tell me the symbols that you are interested in, and I will be happy to analyze them. Just a disclaimer on that. Again, I'm going to give my opinion. So whether you take a trade or not, it's, of course, your decision. And you know, we've been in a bull market for 8 years. So most of what we're going to look at, you're probably going to hear me say, yeah, it's too late, we missed it, we got to wait for the correction or wait for the next move or whatever, right? I typically have to look through 10 to 15 charts to find 1 to 2 that meet my criteria. My criteria is very strict. Not every chart meets it. And I think that's one of the things that frustrates people with Elliott Wave, is trying to force an analysis onto a chart where the patterns just don't exist, right? Elliott Wave is a very powerful tool, but the patterns that it works off of, the theories are based on, are not present on every chart, and trying to force a wave count onto a chart where one isn't could be very frustrating. All right, so hey, we got a couple symbols coming in here. Let's look at them. I'm always excited when I see a symbol that I don't recognize, and I don't think I recognize CC. Oh yeah, I do. Okay. All right, so I gave the warning that I would say, hey, it's probably too late to get in. And by the way, this thick white line, this is a 200 simple moving average. I take a look at that too. That's an important, you know, probably the most widely watched indicator in stocks, and it can be an important support area as well. So I use that as a final filter. Once all the rest of it is met, if I want to go short, I really like to be under it. If I'm going long, I really want to be over it, or at least have enough room down to it that if we do find support there, there's enough profit, right? Okay, so on CC, this is interesting. So obviously, I said Elliott Wave's easy, right? Wave 3 is easy to spot. It's a huge impulsive move, and this thing's been going on since July of last year. That's really when it started, right? There's 1, 2, 3. Don't need to complicate it more than that. So the question is it getting ready to correct? Now, it went down to the bottom of the Ichimoku Cloud. And the cloud here, it doesn't project an exact support area, but rather a range, right? It says this cloud area is where we would find support, and we absolutely did. So the thing to watch here on CC is, this is a pretty big drop. This is a low. If it goes up and does not make a new high and reverses down below the cloud, then you've got a pretty good chance that the correction is beginning. And obviously I looked at this several months ago, so we would readjust the expected retracement once it begins, if this is the high, if price doesn't go on to the next high, if there was 3 ifs, if no new high, right? If it reverses, if it puts in a new low, then the expected target zone is between 38.2 and 61.8, or price-wise, call it 38 to about 25. That's a pretty nice retracement, but you got the 200 in the way that may stop it. So you have to wait and see how that plays out, but that's a potential trade in the future. But too late to go long on this, look how long it's been going long, and it's way too early to go short. That was a fun one to look at, though. Okay, get back here, trying to catch up with your symbols. CMG. Yeah. It's been a sad story at Chipotle, hasn't it? They just can't seem to get it together. So CMG, we had actually projected, right, earlier. Here was wave 3, again, an unmistakable impulsive move. There was the correction to it. It corrected up into this Fibonacci zone, and then it showed evidence of starting down. Had a bit of a excursion up on the way, but we had projected a price target zone down below 317, and here we are sitting in the price target zone on CMG in wave 5. So too late to go short and wait. There's no long setup there on CMG, but it's a great story, and it absolutely is following the Ichimoku rules. SLV, silver ETF. I'm more bullish on gold. So what we got here is a big move up and an awfully big move down. This one is breaking the rules to be a good Elliott Wave pattern. I believe we've looked at it before. No, I'm wrong. The rule I'm talking about would be if the retracement's too deep. If it went beyond 76.4, it would be too deep. Oh, there it did. I knew it did. There, it went too deep, below 76.4. So the probability of another move up on this gets a little shaky. So I'd rather just go find a better chart, and I'm bullish on gold. I think gold's heading up. NIB for Jim. I don't know if I know about NIB, and I'm always excited to hear about a new symbol. iPath, Bloomberg, Cocoa, ETN. So I would check and make sure that this average volume on this is sufficient. I only want to trade if there is a 10-day average of 200,000 shares or more. I want high liquidity. I don't want to be stuck in this thing and get a poor fill. Okay, but if it had sufficient liquidity, this is a nice correction here, and we can confirm with the price oscillator that there's some upward momentum. Okay, everything's here for a nice corrective wave trade. So here's wave 3, big move down, right? It channeled, right? And then it put in, we have to go look, we have to go look at the drill in a little bit here. I know it's here. There it is, high, higher, low, new high as it broke out of this channel. It's there now, another high, higher low, higher high, higher low. It's above the 200, it's above the Ichimoku Cloud. Everything's positive about this thing. So the price target zone, so the current stop, is the next thing to evaluate on a trade like this. So we would put the stop under this last low right here. Our entry on this would be at current price, right about here. The fact that it's pulling back does not trouble me the least because of this pattern. High, higher low, high, higher low. Target, I'm going to be conservative with my target and put it right inside the correction zone, just inside between these two blue lines. And then I look at the reward to risk ratio on this trade. So the risk is the distance between our entry and the stop. Our reward is the distance between the entry and the target. This is like 3 to 1. This is a phenomenal potential trade. I forget who it was because the comments are going so fast. I forget who it was that asked, but kudos to you, man. I'm making a note. I like it. I would check the volume for sure. Got to write that one down, man. Don't want to lose it. It's hard to find good setups. All right. That was Jim. Thank you, Jim. VXX for Tau. VXX is tough. You know, I would only be interested in trading VXX on a very small time frame, intraday or a day or two, right? You got to be, you know, it's the VIX, short-term instrument here, right? You got to understand the instrument, how it settles and all that kind of stuff. It is not like a typical ETF or stock, right? So obviously it has come down, you know, what's the high on this thing? Can we even find it? You know, the high is up over 500. Current price is down here at 34. Now, you can't do a Fibonacci retracement like you could on an ETF or stock and go, wow, it's going to go 38% of the way back up to 500. It's not, right? Because this is a synthetic instrument, if you will, just like some of your, you know, 3x leveraged ETFs. You can't do the typical analysis. They're really meant for short-term volatility trading, short-term movement trading. So be real careful with those. SRPT. TJ's asking, doesn't stock charts let you do Ichimoku scans? I don't know. I don't use it. I know Ichimoku Cloud is a very popular indicator. It's on any legitimate trading platform. Don't like the pattern here on SRPT because we had, you know, this huge move. Some kind of news came out, and nearly 100%. It was too deep of a retracement. Now it's making another big move. These get very hard to predict. So I said up front, right, that predicting that Elliott Wave and the patterns I'm looking for only exist on a small handful of charts. EVC for Richard. EVC. So it's a pretty volatile stock, and that thing swings around like crazy. So it has been in an overall downtrend, and it is breaking up, but it does this all the time. It's above the clouds, above the 200, but it does this all the time and then reverses. So this does not have the pattern either, right? Oh, you're welcome. You're welcome. Lou said thanks for the input on VIX. Okay. Hey, let me go ahead and show you one of my favorite trades right now, one that does meet my criteria and that we're getting ready to take. Gilead Sciences. Okay, so this is a short trade. Here's the big impulsive move down. Unmistakable, right? Man, huge. Here's the retracement up right into this Fibonacci retracement zone. Perfect retracement up. And now here comes the continuation, right? There's wave 3, there's wave 4, here comes wave 5, the continuation of the bearish trend. And we've got a price target way down here at the Fibonacci extension zone. You know, the zone extends. Look how big this is, right? It's huge. The zone extends from 50.66 to 28.97, somewhere in here. I set my target at the upper end to be conservative, to make sure my reward to risk is good, even if it's a shallow continuation. So I'd like to see this get back down under the 200 SMA. A good entry price on this would be 70.93, initial stop 77.71, target 50.23. This meets my criteria. Again, here's why I'll review it, right? Because we've got real clarity on a wave pattern here. Big dramatic move, perfect retracement, clear evidence, everything pointing to the fact of this continuation's beginning, because we got lower lows, lower highs, lower lows, lower highs, breaking down through the Ichimoku Ichimoku Cloud, breaking down through the 200 SMA, clear wave pattern, clear price target, nice big reward to risk ratio on it, oscillator showing growing negative momentum. Everything is pointing to a really nice clear wave 5 trade to the short on Gilead. I really like it. And JD saying, hey, can you elaborate on SRPT? What do you mean you didn't like it? So look at this. This is an orderly market, right? There's clarity. You got an impulsive move, a correction, a next impulsive move, again, with evidence, stacking upon evidence of it beginning. If we look at the other one, SRPT, what we have is chaos, right? We got huge impulsive moves, nearly 100% retracements, and then again, nearly 100% move after that. Doesn't have, and this thing gaps like mad all over the place. So it doesn't have the order and clarity of the last one. I hope that's clear. So like I said, I do like Gilead short as soon as it puts in a new low at this entry price of 70.93. I like trading that with an option contract too. I would just, and my approach to options is we'll go one side. This is a directional trade, right? This is a swing or trend trade, and we expect to be in this trade 4 to 6 weeks. So we'd say, let's go outside, let's be in it maybe 60 days. So I'm gonna go buy an option contract, and I'm just gonna go directional, right? I don't need spreads or flying creatures. You know, the highest profit, lowest risk strategy for options on directional trades is just to go long, right? Long, on this case, long the puts, right? And we control risk on that by position size. So we're only going to spend in premium what we're willing to lose. And then if this price goes up and hits the stop, we're going to exit that option position. We're going to sell the close. We go long the puts. We expect to be in the trade up to 60 days. So we're going to go at least 90 days out on our expiration, probably beyond that. We're probably going to be looking at a March or April contract, right? And we're going to go deep in the money, high delta. We're going to pay a lot for those contracts, but that's okay because cheap contracts can be very expensive. You go deep in the money, high delta, you know, on a $70 stock, you're probably going to be paying close to $1,000 a contract. And some people go, well, Dean, there's contracts out there at the money for $100. Yeah, I know, but the delta is like 15. I want to be at delta 80. So when this thing does move, the price of that contract increases exponentially. It's going to double or triple, and then I'm going to sell it way before we get it close to expiration, way before the last 30 days of the contract life. And we're going to sell it when it has doubled or tripled in price because it had a high delta. That's the goal. That's how I approach it. Cool. TJ, plain options, not spreads for day trading. You know, I'm talking about daily charts here, and I'm talking about trades that are going to last, you know, 4 to 6 weeks. So this is not a day trading strategy, right? Day trading options is a whole different strategy outside what I'm talking about. Yeah, please go over the entry, target, and stop for Gilead. Didn't really understand. Okay. So here's wave 3. There's a big impulsive move down. It corrected. It's beginning wave 5. The target for wave 5, the Fibonacci extension zone, is these 2 green lines. I'm simply measuring the 3 data points with the Fibonacci extension tool, right? The low and the high, right? And then the high, low, high. Up the top of this trend, the bottom of this trend, the top of the retracement, that projects the Fibonacci extension zone. I've got a target set here at the top of the Fibonacci extension zone of 50.23. I want to see a lower low, lower high. I want to have one more new close down below the 200 SMA, and that's a little bit compressed. You can't see it real good, but that's at 70.93. So I want one more low. Make sure this thing's heading down. Right, we're down below the Ichimoku Cloud. That's awesome. My stop is up at the previous high up here, previous major high under the Ichimoku Cloud. So that's the entry. That's the setup on this trade here. I got time for a couple more. JD, PFPT. So obviously in a big, it was a little chaotic, but then it organized itself into a really, really nice big move up. So this is all wave 3. This uptrend is still going, but something interesting happened here. So remember Dow Theory, the definition of an uptrend. I'll expand this a little bit here, blow it up. We can see the point I'm making, right? All along, we had higher highs, higher lows, higher highs. Didn't quite go higher, but higher high, higher low, higher high. Uh-oh, look what happened here. We took out a previous low. Oh, it's good. That's why we check. I'm drawing a line. Did not. Okay. So came down really close. If it goes below and does not go on to make new highs, this thing could be correcting. Not quite yet. Not quite yet, but it looks like it's running out of steam. Look at the oscillator, definitely losing momentum, losing energy in this trend. So what you want to do is wait. It's too early to try and take this short. It's way too late to go long. Way too late to go long. That's a big mature trend, right? It's been going on the whole year. So then you can measure where would this thing retrace to once it starts. And here's the retracement zone, 75 bucks, call it down to 62, right? Probably want to let it clear the 200. There's still profit left after that. So that's what we're waiting for on proof point, is the correction. Again, way too late to go long. It's too early to go short, but if that happens, it's not proven yet. If it happens, there could be a nice correction coming on it. All right. Hey, I want to let you know, I want to invite you. I got a webinar coming up here. The title is, Will the Grinch Steal the Santa Claus Rally? It's really, we're going to talk about year-end trading strategies. So we're about 6 weeks from the end of the year, and there can be, some interesting things that happen. There's, the idea about the Santa Claus rally, and there's year-end profit taking and tax selling, and then upcoming after that's the January effect. There's a bunch of theories, and I'm going to be talking about how to stay focused on the realities of the market. And I invite you to come join me. It's next Tuesday at 7 o'clock Eastern, 4 p.m. Pacific time. And what I want to do is post this in there. I think I sent that to everybody. Hope that worked. Oh no, I got to do it in the chat, right? Put it here, paste, and send to entire audience. There, I just posted a link to that. So again, webinar, year-end trading strategies, this coming Tuesday, November 21st, 7 p.m. Eastern, 4 p.m. Pacific. Hope to see you there. Free session. And we'll just be talking about year-end trading strategies. All right, RTY for TJ Packman. And I think that's going to be about the last symbol. RTY, I'm not sure if it has a symbol or an abbreviation for something there, TJ. I think I've caught up here on all the symbols. If so, there's some that went by way earlier that I missed. We got about 2 or 3 minutes left. I shared that favorite trade, again, Gilead right now, looking for that to go short. Beta wants to look at Caterpillar. Had a big year. I haven't looked at it in a few weeks. Let's see. There's a trend, eh? Wow, what a trend that has been. It's totally impressive. Starting to consolidate just a little bit, isn't it? Starting to lose a little momentum. So this is one, I could record this answer on many because of the bull run we've been in, right? This year and then subsequent or prior years, right? That's a great trend, but it's too late to get long on that thing. Who knows when it's going to end, and it's too early to short it. There's some early signs, and when it does correct, it's going to be good. But for now, nothing there. Nothing there. All right. Well, I'm going to go ahead and wrap it up. Once again, Renee and Investor Inspiration, thank you for inviting me. Thank you, attendees, for for joining and watching along here, for your questions, your interaction. Made it really, really fun. And we'll hope to catch you next time. I hope to see you at that at the webinar next Tuesday, where we talk about whether the Grinch is going to steal the Santa Claus rally. All right. Thank you and take care.